News for global markets has been mixed over the past 24 hours, and this has seen a bit of mixed results for global shares. McDonald's did make an announcement, and I do see that this has been a pretty good indicator of what is happening for the global food sector. They announced that sales have increased by 6.5% over the past month, and this has mainly been due to promotional activities as well as new sales for beverages. While there was some positives out of the US market, the Irish do seem to be back in the news once again. Finance ministers from the EU are heading to Ireland to discuss some restructuring packages for their debts. The Irish have suggested that they are looking to increase taxes next year by €6 billion. With the mix of news in the marketplace, the US dollar has been back in favour. After trading well over 79 cents against the US dollar, the Kiwi dollar has weakened slightly over the past 24 hours. The Kiwi has had a run up mainly due to the increase from the US Fed in terms of their quantitative easing program. However, there have been some other contributing factors, including a positive labour market out of the New Zealand economy last week, as well as further investor appetite to get their hands on some agricultural assets. Of course, New Zealand does offer some of these factors. However, over the past 24 hours, share markets have weakened and the US dollar has been back in favour. We aren't expecting to see the Kiwi dollar strengthen further from current levels and are forecasting it to weaken slightly. On Tuesday morning, it is trading under 79 cents against the US and under 49 against the Great British Pound. International prices for lamb remain very high. Prices out of the UK are currently about 25% higher than they were this time last year, and about 50% higher than they are on a longer term average basis. Supply in the UK remains tight, with many processors sending product across the shores to the EU, which is offering pretty good returns in the UK market. The outlook for prices here in New Zealand is also looking pretty good. While we are coming to the end of the Christmas trade period, we are expecting to see some slight decreases in schedule prices in the short term. The high New Zealand dollar against the pound will also put some pressure on farm gate prices, but on an average basis right through this season, we are expecting to see schedules far exceed those in 2009.